Good afternoon, everyone. Thank you so much for joining us today. Thank you for being here as a part of this conversation on the state of FinTech. What's happening in the space is incredibly exciting with a bunch of Ohio people, companies, and ideas doing incredible work. Today's conversation is going to be around innovation that empowers. The future of FinTech and the power of some of these innovations is incredible. And it can tackle some really big challenges, opening up opportunities for citizens across the globe. And again, what's fun about this conversation, while some of these ideas have literally global scale and opportunity, we're going to be hearing how Ohioans are tackling this and making really big impacts on the world. We wanted to thank you all for being here today. My name is Chris Berry. I'm the president CEO of OhioX. We're a statewide tech-focused nonprofit working to build Ohio into a tech hub. And what's fun is we get to curate conversations like these, talk with leaders like we have with you today, and we'll do a short intro of them later, just in a short moment, and have these conversations because in Ohio, there's so much excitement going on, but it's a big state. We're very kind of dispersed from Cleveland to Cincinnati and everywhere in between. We know it's a hot June day. Some of our friends in Cincinnati and Columbus don't have power. So definitely thinking of you all, and hopefully this can help kind of take your mind off the heat for a little bit in this heat wave that we're experiencing. We also want to thank Rev1 Ventures for being the presenting sponsor of this, making this conversation possible, making conversations like these possible. They're doing great work. You're going to hear from Ryan on their team in a moment. He'll be able to share some of the expertise that they're doing, some of the investments and some of the power of bringing scale to market that they're working on with their portfolio companies. But for now, I want to dive in and introduce each of our panelists. What we'll do is I'll start with one. And hey, Don, good to see you from Cincinnati. Thanks for joining in the chat. That's a great reminder that as we're talking, feel free to hop in the chat with any questions or feedback or any thoughts, or you can send them directly to me as a DM if you don't want to kind of, have everyone read it, but I can work it in for you. But we'll go around now and I'll do an introduction very short of each person, but I'll welcome our speakers to then share a little bit about themselves and showcase some of the work that they are doing in this FinTech space. So first up, we're going to go to Naveed in Columbus. Naveed is the founder and CEO of a FinTech called Dolr. Naveed, thank you so much for being here, and thanks for your expertise and your passion behind this, which I know is immense. So welcome, and if you could share a little bit about yourself and your work.
Thank you so much, Chris. I'm so excited to be here. I think speaking about the innovation that empowers, it's such a powerful thing, right? All of us are doing work in this area separately. At Dolr, we surround people with the help they need for their biggest financial burdens. And today that's student loans, like student debt, and then beyond as well. But I'm particularly interested in speaking about all of the aspects that this topic touches, right? Like finance is everywhere. It's how we buy, we sell, borrow, lend, even pay, give to charity, all of these examples, right? Earn money. It touches all aspects of our lives, and as things are getting more digital, there are people who struggle more to be involved or included in those processes or conversations. So it's very exciting to be innovating in this space, and I'm very excited to hear what everybody else is doing as well.
Awesome, thanks, Naveed, and we'll go now to Ryan at Rev1 Ventures. So Ryan, welcome. Thanks for joining us today, and you could share a little bit about yourself and what you and the team at Rev1 are working on.
Sure. Thanks, Chris. Nice to be here with you all and serve on this panel today. So Ryan Helon with Rev1 Ventures. We're an investor startup studio and seed and early stage fund manager based here in Columbus, Ohio. We are very focused on Ohio and particularly Central Ohio and helping to build the tech ecosystem here and the startup community. And as such, we've become one of the most active investors, in the Great Lakes region over the last few years and have gotten to back a number of, wonderful entrepreneurs building companies in our community. Our investor startup studio model allows us to do more than just write checks. We help companies build their team, connect with potential customers, and further develop their business with different mentors and advisors in our network and different services and programming that we provide, entrepreneurs. So if you're building a great enterprise, technology company here in Ohio, we would love to hear from you. You can come to our website and submit your idea, and we will get back to you. But excited to be talking about our work in InsurTech and FinTech today on this panel.
Great. Ryan, thanks so much for being here. And again, thanks to Rev1 for all the partnership and support over the past couple of years. We'll now go to Alex at Upstart. Alex, welcome. And again, thanks for joining.
Yeah, thanks, Chris. So I'm Alex. I'm a VP of product at Upstart. And Upstart is a mission-driven fintech company that helps banks and credit unions leverage AI to originate credit or lend money. We do that in a way that helps them have more profitable and more inclusive loan portfolios, which I'm sure we'll talk a lot about. Upstart as a company was founded about 10 years ago in Silicon Valley. And we have a headquarters there, as well as a headquarters here in Columbus, Ohio, which has been here for a number of years. Really quick, just a little bit about me. Before Upstart, I've had most of my career in the high-tech industry. Spent about a decade on the West Coast. Spent about 5 or so years at Amazon, and then started my own thing before making my way back here to Ohio and make my way to Upstart. Excited to be here.
Thanks, Alex. We appreciate it. Natalie, Hyland, welcome. Thank you for being here.
Thanks for having me. So I co-founded a company called Learning Machine a few years ago that built the first Bitcoin-based digital identity wallet. We sold that company to Hyland in 2020. And we are in the process of integrating our verifiable documents capabilities with the Hyland software stack. So I'm actually based in Dallas, but I'm up in Westlake quite a bit these days.
Awesome. Well, thanks, Natalie. And I think that some of your comments, you mentioned Bitcoin and then some of the enterprise stuff we've also been talking about is interesting because when we think of fintech, there's opportunities in both realms and both are equally powerful. And so Natalie, I'd love to kind of go to you because, you're active in both where you're, the Bitcoin and some of the cryptocurrency and, that is as direct to, that is consumer focused as it can all possibly be. But then you're also seeing the enterprise side. So maybe if you could just kind of give us a little oversight on what you're seeing with both and just kind of how you're viewing that and, where they kind of overlap and where there's maybe some differences.
Absolutely. So when we talk about Bitcoin, what we're talking about is the Internet of Value. In other words, the original Internet TCP/IP protocol made sending information from point A to point B trivially simple and virtually free. What it didn't do, however, is create a standard for communicating value in the same way. And so Bitcoin is basically Internet native digital money. With this, however, the security of known issuance, the verifiability of the transaction ledger, the virtual impossibility of tampering with the history of that ledger, that has now become an internet identity infrastructure. So that's the other thing the original internet didn't have. It didn't have an identity layer. And so these two cases, money and identity, are really at the center of Bitcoin, and they're also at the center of fintech. And so in reality, what we're seeing now is that like every fintech company is in effect becoming an identity company. And the adoption of these Bitcoin-based identity standards are going to become increasingly mainstream and critical to ensuring trust while transacting digitally.
That's great, Natalie. And as you mentioned, I just wrote it down, identity companies. I saw a couple heads nod. So I don't know if, Alex or Naveed, maybe one of you want to kind of follow up on that and what that means to you. And for those that maybe aren't familiar or in fintech, day in and day out, like each of you, what that means and, your kind of perspective on that. So I don't know, again, Alex or Naveed, if either of you want to hop in there.
I was waiting for Alex, but okay.
Alex,
I
go
think
next.
Yeah, it's so wonderful to hear about this combination of things, right? Like the digital money, a lot of conversation about anonymity and not being able to be traced or whatever. But then at the same time, the importance of identity in all of this. And I think Natalie is absolutely correct. You're seeing more and more of money movement being focused on identity verification. So that's a very interesting area to explore. Later on, I think we're going to speak about some of the biggest innovations going forward or trends, and I definitely was going to say payments and identity. That's the core area. It is interesting though, right? Like that balance between anonymity and identity verification. How do you hold that? How do you create this environment where you're not giving up too much of your life available to everybody on some public ledger, and just enough so that you can transact safely and everybody involved can trust that what's happening is what is meant to happen. So interesting questions to explore.
Yeah, I mean, just jump in for a minute. Like, I think it's incredibly interesting and incredibly powerful, the two concepts that Natalie was mentioning. And it seems like we're just so early in those technologies and how they will change the world. And thinking about what we're talking about here is how they will empower people. And I do think that technology does have just a huge potential to change the world in terms of bringing access to capital to places where maybe that's not so easy, or where governments are making that prohibitively either expensive or through inflation. So I think it's a super interesting thing, and I do think it will be something that changes the world. It is super powerful, and I think we're just very early in seeing that happen.
Yeah, great. Thanks, Alex. And Alex, you mentioned access, which raises a lot of DE&I opportunities to getting more people, banking and financial options. So maybe Ryan, if you could talk about from the Rev1 perspective, how you all are kind of thinking of the DE&I opportunities within FinTech.
Yeah, so I think it starts just with our own team and efforts, we've made to make sure our team is diverse and reflective of our community in which we're seeking to invest. Two, it's, intentional, outreach, across the spectrum and trying to make sure we're meeting, diverse entrepreneurs, across our ecosystem and forming partnerships with folks that can help us continue to improve how we're connecting. And then I think, the third layer is, then working on companies that are, expanding access, reducing, fee structures and costs, and providing, convenience to traditionally, underserved market segments. And again, we're approaching that primarily from an enterprise perspective, and that could take a number of forms, helping, incumbent financial institutions improve their operations and then pass on some savings and efficiencies, in costs, et cetera, to their customers. But then also, on obviously the startup side themselves and, building and bringing new financial services to market that are, meeting entrepreneurs where they're at. The one thing that I've been really intrigued by is the growth of the BNPL, segment of the market. And, I think it's really interesting to see some really successful companies, that have gone public in that segment, but then thinking about, financial institutions that are also trying to offer, enhanced value to their customers and, consumer preferences, wanting to use debit cards and better manage their spend as opposed to, using credit all the time. So just sort of the intersection of consumer preferences, meeting consumers where they're at, providing, additional value in products, to traditionally underserved, markets, and doing that through everything from the outreach to the entrepreneur side. And the way our team is formed, we kind of look at that as, kind of a virtuous cycle in terms of the different ways we're trying to impact.
Chris, would it be okay to jump on that and add?
Absolutely. Please.
So, expanding access is an incredible, a super, super important part of our mission here at Upstart. And so what I think we all know, like, access to capital is just incredibly important in our society, in our economy. It's what helps people, move from one location to another. It would help them take out loans to go to school. It's just an incredible part of ultimately, like, building your life, building wealth. And it's incredibly inefficient. So what we see is that money does not go to the right people at the right prices. And so one data point that we've seen that we use to sort of like showcase that is that if you look at the number of people in the US that have defaulted on a loan, that number is about 40 or about 20%, or 1 out of 5 have defaulted on a loan. So 80% have not. But if you look at people who actually have access to prime credit or the best rates from banks, that's only 40% of the population. So there's just this huge difference in terms of who can access capital and who should be able to access capital. And that's really what we're all about. So what we're trying to do is use, AI technology, so better modeling techniques, additional data. So I'll think about it as like other ways to determine whether people are credit worthy, and use that to find out whether they're going to repay their loan and give them access to that capital. So it's exactly some of the stuff that Ryan was mentioning, but sort of that inclusivity, building access, is exactly what we're about at Upstart.
That's great, Alex. And Natalie, I'd love to go to you because as Alex is saying, I'm hearing access and some of these opportunities. I think of some of the whether it's digital currencies or just some of these innovations that can really open up, opportunities to consumers. And, a lot of it can just be as simple as a phone these days. And you hear these kind of stories of innovations that don't require, and I've had to do it myself, where you go to a bank and go in and out 17 different times. And did you forget your ID and you need some paper on a letterhead with a digital signature? So, the space that you're in with some of these, digital currencies and kind of the FinTech, that both from the job side and then also some of your kind of, side passions with other associations in this space. Would love to hear your perspective on it.
Sure. So one of the problems that Bitcoin was designed to solve was the problem of financial exclusion. So, many people, over 1 billion people around the world, lack access to the traditional financial system, often because they're simply not profitable to bank. Banks actually lose money on most of their customers. And so they rely generally on a certain percentage of their customer base to create returns. Now, for someone who wants to participate in the financial system, but finds themselves in this excluded category, one of the ways that they now have the option to participate is through Bitcoin. So we've seen Bitcoin flourish in areas where, for example, there may be laws against women opening bank accounts, like Afghanistan. Or areas with repressive regimes where political dissidents are punished by being removed from the banking system. And by the way, this is something that doesn't just happen in authoritarian regimes. It happens in virtually every country. And so what we're seeing is the initial adoption of Bitcoin is happening at the margins. And a lot of people, who are fairly comfortable materially, have never experienced hyperinflation. They've never, been cut off from their banks, are kind of asking the question of like the value proposition of Bitcoin. Well, it's most apparent to these people who are currently excluded. And as their usage of the currency picks up, it's going to percolate toward the center.
Thanks, Natalie. Naveed, I'd like to kind of toss it to you on this one of, with some of the work Dolr and kind of creating opportunity with financial incentives, using, kind of you have kind of the recruitment tool that Dolr is for companies, but then also empowering employees and people with, higher education loan and debt to kind of, have you dig a bit more into the work that you're doing and seeing and, the Dolr viewpoint on some of this kind of, access and empowerment.
Yeah, I'd love to do that. So student debt since about 2008 has been the biggest reason for wealth dissipation, especially amongst people of color. And what you find is when you look at the systems that exist to provide protections, they end up working against the person that they were designed to protect, right? So student loans initially were designed to lower financial barriers to education, have everybody the same access. If you could get into a school, you could pay for it with a federally guaranteed loan. Not so much the case anymore because the return on that is in question. And so we're looking at it from the perspective of a person who's made that investment in themselves and are unable, because of their student loan payments and the burden that this carries, they're unable to start their journeys towards wealth building. And in fact, even beyond that, like people aren't starting families, not buying homes, they're not getting married, right? Like all of this specific, like directly, why are you not doing these things? People say because of the student loans. And the biggest problem when you look at that is cash. And so what Dolr does is address the problem directly. We find people sources of cash that they otherwise wouldn't have access to. And we help them make those extra payments or even just meet the minimum in some cases. So we work with their employers to provide a student loan benefit. We work with brands that they shop at to provide cash back. We've built the Venmo for student loan payments, so anybody can participate in repayment for anybody else. And we help people also automate some of their existing habits. I do want to speak a little bit about some of the things that Alex and Natalie mentioned about access. In particular, I think organizations like the CFPB, for instance, they exist for a reason. They exist to provide protection, consumers protection, right? It's in the name. And I think that this is one area where we don't see enough innovation, right? Like a lot of the times the protections are built, like for instance, the requirement to be a what is accredited investor, right, is really a barrier. Like, why would you have these absurd criteria for somebody to be able to take the little money they have and invest to build a better life, to build wealth? It doesn't make sense. So I think we do need to see innovation in how we construct policy around creating that access for people. Like we have, Columbus is doing a fantastic job, right? I'm sure that the work that Ryan and team are doing at Rev1, plus we have this access fund by Zell Capital that's allowing people to invest in startups for $1,000. We need to have a bigger conversation around this though, right? It's not only about, it's about creating those opportunities for other people to have outsized returns based on, their own risk. But if they can afford to spend $1,000, then they should be able to participate as well.
Yeah, can I jump in? Yep. So just on that, on just sort of innovation and regulation, that's a huge thing for us. I mean, we're bringing a new technology, AI, into an incredibly old industry, and old, not just old, but incredibly conservative, and people are scared. And we've partnered very closely with the CFPB since we've started, in order to develop standards for fairness testing, et cetera, in order to get people comfortable. But I do agree that the technology is transformative. We see increases in approval rates with our technology of around 40% higher than what banks and credit unions are using today. So, and it's even higher across protected classes. But we need that innovation. We need that partnership and that additional stamp of approval from regulators, so that people are not scared of this new technology. I got to imagine some of the same thing is happening just sort of on the cryptocurrency front. It's a tremendously powerful technology. It's new to the scene. It can do something that we've been doing for a long time in a much better way. But how do we get everyone comfortable with that and see it for what it could be, and not just see it as something that seems scary?
If I could jump in there and just build on Alex's point, I think one thing we've been intrigued by, and this is sort of trying to parlay things we've learned through our insurtech investing to thinking about fintech, is the use of new and different data sources to assess risk, and whether that's underwriting risk in insurance context or credit risk in a lending context. Thinking about, okay, there are these very traditional, mechanisms to assess risk, and some of them, may or may not have varying degrees of, bias or unintended consequences in terms of their implementation. So thinking about, are there ways to assess risk better, more accurately, but also in a way that, reduces bias that may have been embedded in previously, well-established, well-regarded, commonly utilized methodologies for assessing risk and applying that. So we're intrigued, and we are seeing opportunities, across both fintech and insurtech. They're trying to use these new data sources, new ways of evaluating risk, to come to better outcomes, and then achieve some really great outcomes in terms of expanding access, more fair, egalitarian, opportunities for borrowing or insurance and things of that sort.
Thanks, Ryan. And Natalie, I'd like to kind of bring it to some of your work, because, talking regulatory and protection and perspective, that's government. And you have a lot of experience in working with government on some of these, at state levels, but then also federal level, some of the blockchain and cryptocurrency work. And I think tech is also, historically, it's kind of been the IT function. And then as it's grown out into tech as its own sector or industry, it's a little less familiar with working with government, like a lot of other sectors and industries like manufacturing or healthcare. And so could you just talk a little bit about, your experience and where the power is, and then, kind of what's left to do as this continues to only grow of importance?
Sure. I would say that it really depends on what angle you're looking at that question. The technology industry is actually extremely powerful from a lobbying and political influence standpoint. So I would never argue that they don't have a seat at the table. What I would argue is that there's a big gap often in technical literacy between the people who run these companies and the people holding elected office. And that's not a criticism, it's just their focus is different. And so when, entirely new technical innovations like Bitcoin come on the scene, there's a profound learning curve that takes years, if not decades, on the policy side. And there are obviously differing perspectives within industry on technical innovation. Some of that is due to the classic innovator's dilemma. Nobody wants to be disrupted once they're the king. And so you can actually have, certain factions of the technology industry opposing innovation and others embracing it. And then that becomes a kind of conflict for influence. And so it really, when you're doing policy work for a trade association or representing industry, it's really important that, you're laser focused on the goals that you need to achieve and that you understand who your allies and coalitions are, both in the short and long term.
Thanks, Natalie. And one of those, as we're kind of talking tech literacy, one of the things is, these emerging technologies, Bitcoin, blockchain, NFTs, artificial intelligence, machine learning. It can be a lot of, it's buzzwords, but there's realities and then there's hype. And so, I don't know if Natalie, you want to take this, and then maybe we can go to Alex next, since you've, mentioned some of the artificial intelligence you are doing. I'd be curious, as technologists and in the innovation space, how do you kind of separate between hype, reality, what's kind of just like malware out there, and then what's also has real potential? And so maybe Natalie, we can go to you, and then Alex.
Sounds good. Absolutely. So there's always a tension between innovation and criminality. Anytime we're in a wave of innovation, whether it's the gold rush or the early, industrial revolution, or the fourth industrial revolution, or now Web 3.0, it's really hard to differentiate often the scammers from the people and organizations offering legitimate value. And this is why, from my point of view, having a crystal clear sense of what problem a new technology is solving, for whom, and then what the revenue model is. In Web3 and the NFT world, often the revenue model is simply pumping the value of a token and enabling investors to cash out at the moon. And so what we've seen is it's created this just like trail of destruction for retail investors who are locked out of the accredited investor category and have often put significant sums, even their life savings in some cases, into these crypto products that have turned out to be little more than scams. Bitcoin, on the other hand, is internet money. And while its price is volatile in the near term and it fluctuates, we've seen an unmistakable adoption curve since its introduction in 2009, that reflects its fundamental value as digital sound money. And so this is a learning curve that the market is still on, and we're going to see it continue to play out over the next few years.
Super interesting. In our world, no question, AI, ML, and lending, there's a lot of buzz, a lot of hype happening. The way we try and cut through that is really through data. So in lending, we are making a risk prediction for a loan, and that happens over time. Whether does that prediction become true or not, And that's what every lender is doing. And what we want to do is just, that data is publicly available. We securitize our loans and sell them, just like, many other lenders do. They're rated by ratings agencies, and you can go look at those ratings, and you can go look at our performance, and you can see that the performance of our loans vastly improved or is better compared to the other different types of modeling and risk prediction. So for us, it's not like we don't avoid the term AI and ML. It is core to what we're doing. But what we want to be separate from the hype, and we separate ourselves by just pure numbers. Go look at our performance. That's what backs up what we're doing.
Thanks, Alex. So Ryan, I'd love to hear from an investor perspective, but as you're looking at all sorts of different companies out there doing all sorts of different things, how do you kind of weed through that of, what's kind of building that future now, and then what's maybe either a bit too far ahead for its time, or, is just not going to, kind of happen?
Sure. Well, I think it starts with what, Natalie mentioned, who is the customer, what's kind of the differentiated, unique, value that is being provided or being sought to be provided. And, what is kind of the business model? Can you charge for it? Can you create, a business model that, in the long run will, be profitable? So I think that's really the lens that we look through. Again, we're getting in quite early on a number of our investments, seed stage. So sometimes an early version of a product, some early customers, early revenue, but things are not really proven on any, detailed level at the stage at which we're often writing our first check. And then, I think there is a lot of innovation here. So trying to understand just sort of both the technical risk, as well as that market, adoption risk that's going to, be possible, for a new company. So, I think we try to understand the market. We try to understand the technical development. We try to understand, the behavior change that will ultimately be required, for this to be adopted. I like what Alex mentioned, the proof ultimately is in the pudding. What is the performance, of, the product versus, existing, offerings, from a lending perspective, are you materially reducing, the credit risk, in a portfolio by adopting, a new underwriting, approach and methodology. So that's what we're trying to always get, signal on, as we're evaluating an opportunity.
Thanks, Ryan. Naveed, anything from your side to add? And I'm sure the answer is yes, because I know how passionate you are on this stuff. But how do you all weigh at Dolr? All these things, all these new kind of technologies, things that all these startups out there are kind of talking about, buzzwords. Like, how are you kind of wading through this? And I guess Dolr, and then just kind of your own intellectual curiosity within FinTech as a whole.
Ryan and Alex both hit it on the nail, right? Like, you have to demonstrate that you're doing what you say you're doing. And for us in particular, is everything we do is aligned and measured against how much we're paying towards student loans. Super easy. Have we increased how much we're paying towards people's student loans? Yes, that means we make more money. More people are happy, more importantly. So super interesting from that perspective. I think it's so hard with innovation to sort of distinguish between hype and reality, especially at the earliest stages, right? Like, I'm still very skeptical about the crypto, right? But I'm starting to appreciate some of the use cases outside of currency. And then you go and you see whole of DeFi blow up last week. And now I feel like maybe I should have been a little bit more careful. It's still hard. It's when the experts are struggling, I don't think we really can discuss the hyper realities. Like, we're still trying to figure it out. I think another thing we could add to the hype versus reality is, how much are the people that you build it for able to explain your solution or understand what you're doing, as compared to what you might say what you're doing. And I think the more people who get and repeat the words that you say, but in their own flavor, the more likely it's not hype.
And thanks, Naveed, for that. And one of the love the chat. So thanks for folks sending some stuff in. And one of them, as I pull it up, I kind of want to pivot a bit to kind of the Ohio opportunity. And Tom, thanks for your question. And Tom's asking about Central Ohio, but we'll broaden this out to Ohio as a whole, and we can kind of talk about one-offs. But FinTech in Ohio, what does that mean to each of you? And I'll start with you, Naveed, because we've heard a little bit about the Upstart story, but you're also someone that has brought your company here. You were in Florida. You've come to Ohio for work, and you decided to build a FinTech company where you could build it in Florida. You could build it in Austin, Texas. So, as Tom asked, why should someone start a FinTech in Columbus or, more broadly Ohio? Because we know of ones like Splash Financial up in Cleveland, and, there's one down in Southwestern Ohio and Cincinnati, and more here in Central Ohio. So Naveed, maybe if you could kind of a little bit on your story with Dolr and, why you've decided to do it in Ohio and Columbus specifically.
We brought Dolr to Columbus because in Columbus you can have a meeting with anybody at least once. It's up to you to determine to book that second meeting, and that was the most powerful thing, especially for an early stage, underrepresented, under-networked group of founders. Having that access that Columbus opened up was just incredible, right? Big reason why we came here. Second is access to expertise. There are a lot of people here who have done years and years of work in banking and insurance, in payments, and their experience, and they've seen, I don't know how many times I've had conversations with folks who are like, this is not really an innovation. I saw this 20 years ago. It was called X, and this is the reason why it failed, right? Like really interesting stories about why things might work, why the timing might have been wrong. Very actionable things that you can take away from. I think the biggest challenge is there's still a lot of a conservative attitude towards investment or giving people access to capital, right? We're very fortunate at Dolr. Both of our institutional investors are from Columbus, Ohio, right here. But a lot of other founders I speak with complain about having to leave the Midwest or leave Ohio to go and seek their venture funding. And they say that their competitors are moving at light speed because they're raised on the East or the West Coast. So I think that's a big challenge, and one reason why somebody might have pause or think twice about forming a FinTech, in particular here in Columbus. It's changing though, right? Like you have funds like the Coach Impact Fund, Dell Capital, even Rev1, Drive Capital. You can't speak about investment in Columbus or Ohio without Drive. Jumpstart as well up in Cleveland, right? There's a big movement towards lowering those barriers, but we still have a long way to go. And ultimately, it starts with angels, right? Like usually before you get your first institutional round, you have an angel round. And we're very fortunate that we have a fantastic angel, hey Tom, that's backing us. But the angels, I think there's still some education and a change in culture or investment culture that is going to take for us to really compete with the coasts.
Yeah, thanks, Naveed. And Alex, I'd love, I know you've shared some of yours, but another question that was in the chat, so thank you, was from JD about, what is the Upstart presence in Central Ohio? And I love the response you said, which is that you'd estimate about 1,000 engineering, machine learning, credit analysts here in Ohio. And I mean, that's an incredible amount. But your company, is a startup now, it's a publicly traded, but it was an HQ too. And I think that's another interesting trend of opportunity that we've started to see a bit of. And you all are kind of the poster example of that, where, it's headquartered in the Bay Area, or it could be New York or Seattle. But for a lot of reasons, and I'd love to hear your perspective, it makes sense to build a big operation in Columbus, in Ohio. And we're starting to see some more of that.
Yeah, absolutely. It's been a tremendous success for us. So, rewind to, 2017, 2018, we're a up and coming, fast growing FinTech startup, and we're in the Bay Area, and we're competing for talent with Google and Facebook and all of the big tech companies, and they're hiring. They hire so much, and honestly, they pay top dollar, and it's just an incredibly competitive market there. So we recognized pretty early that if we wanted to, continue to grow towards, our aspirations, we were going to need to find a way to expand our talent pool. But we didn't know exactly what that looks like. And so we started looking around at various cities across the country. It basically anything from Chicago to Austin to St. Louis, Columbus. So and we just started looking at what makes a city attractive to us. And Columbus really stood out. So we're a data science company, machine learning company. So we actually did some analysis in terms of the available workforce and, how many people here had the title of, data scientist or software engineer versus how many jobs. So that we did take a quantitative approach to it, but also looked at, how many banks are within like a 2 hour or, a few hour drive of Columbus? Is there a big university that's going to continue to pump out software engineers and machine learning scientists? And so there were just a number of reasons. Jobs Ohio was another, very helpful factor for us. They helped us out a lot. So across a number of dimensions, we just thought Columbus really stood out ahead. We, put our first site, I think we started here in early 2019. And last year, we surpassed our Silicon Valley headquarters as the largest site for Upstart. So it's just been a tremendous success, I think, for us across the board. It's really been great. We actually now have 2 sites. We have our first building is in the short north, and then we have now a very large office in the eastern area.
I love that. And I love the Upstart because there's a lot of routes to this tech success. And what you all have built, Alex and Grant and the rest of the team, is just really, really incredible. And I love hearing that. I've heard this story before, but I love hearing it because I think it's so powerful and it can be replicated.
Absolutely.
Yeah. And so
no,
Ryan,
don't tell him. You don't want anyone else to do it.
Yeah, exactly. Ryan, would love from an investor thesis of, you're investing in companies here, but also I presume coming across ones that, maybe could relocate here. And there's a lot of examples of companies coming to Ohio from other places. And Columbus is one of those. But again, we know of ones and doing great things in other cities. So from the Rev 1 perspective, what makes Ohio, what makes Central Ohio unique?
Sure. Well, I loved what Naveed said. You can get a first meeting, with a lot of folks. And I think that is interesting, this, notion of Columbus being a welcoming and open, community. And it, I think, embraced a lot of, startup companies that have formed here. That's a big part of what we try to do to help the startups we work with is connect with corporations as potential customers and, validate their product and that sort of thing. Being largely an enterprise investor, that's really important to get that early feedback loop. And then I also like what Naveed said, then it's up to you to kind of further develop, that relationship. So I think that piece too, just sort of a welcoming environment. I think what Alex mentioned, kind of our economic development infrastructure is really powerful, especially as companies kind of reach where Upstart has grown in terms of rapidly scaling and needing access to, larger facilities and, being connected to, opportunities to hire and develop, the workforce that they need to be successful. Certainly our university infrastructure, here in Central Ohio and Ohio is great. And then from a financial services standpoint, we do have this great, tradition of insurance and financial services. Rev 1 was really excited to have a couple banks join as limited partners in our most recent fund, and we manage an insurtech fund. So sort of participation in our incumbent financial services and insurance industry, in venture, in innovation. That I think is powerful for companies that are thinking about where they can build and grow a successful, FinTech company or just, technology startup, generally.
Yeah, absolutely. And I'll kind of add a couple comments there from my perspective when what we're seeing, of the kind of the opportunity in areas that we can a bit improve. I'll start, I guess, one echo, Naveed, you mentioned that the venture capital, all this stuff takes money. And I think Mark Kwame, has famously said, Ohio could use 10 more drive capitals, but just the opportunity and the investment that could happen. And, that takes time and it takes a lot of dollars, which, I know a lot of good people are working on that, but that is an area that, more money. And I think that's where, again, successes like Upstart, where bringing people in, kind of building that pipeline and making it easier so you don't necessarily have to hop on a plane, which I think in the pandemic has made Zooms more acceptable. That's kind of maybe a second one of, and I'm sure Alex, you'll definitely agree with this, is like more flights from our cities to the Bay Area specifically. You can get to New York City pretty quickly and pretty easily, but there's not many directs from our big cities to San Francisco, and they've kind of come and gone. And I know, again, there's good groups working on that, but that's another one where you're not spending 12 hours in commute, but it's just a direct flight, which that's big. And that really does help. And then, Ryan, you mentioned the financial institutions. I think that's one of those things that makes Ohio really unique and really creates an opportunity here, because you have Fifth Third in Cincinnati, you have Huntington in Columbus, you have KeyBank in Cleveland, you have JP Morgan Chase with a massive financial institution. And so we've seen it in InsurTech, where people have worked for some of the bigger insurance companies, and then they'll leave and go start their own. And it kind of builds this ecosystem and this flywheel. So I think those are kind of, the exciting things, that there's a lot of employees, there's a lot of talent in Ohio that know this space and financial services and, the opportunities for innovation. With about 10 minutes left, I now kind of we'll kind of get into a fun round. We'll do some like round robins. So we'll go Ryan, Alex, Naveed in the order. But if anyone, hears something fun and they want to hop on, please do. But Ryan, we'll start with you on, first question being, what's a FinTech innovation? It could be a company, it could be an idea, it could be just something that you're, reading in the Wall Street Journal and watching on CNBC, although they might not even be kind of up to these things yet. In the FinTech space that's exciting to you, that you're watching, you think people should maybe keep an eye on, and it's definitely caught your eye. So we'll go with you, Ryan, first.
All right. I think, thinking about, Web3, decentralized finance, but applying it to very kind of specific, types of payments for different services within specific industries. I really think, figuring out, how to win in one specific context and solving a problem that really addresses, an existing, inefficiency is very powerful. Whether it's, the intersection of, say, like HR tech, in FinTech around payments, with employees, or something around, a specific, incumbent industry that just has inefficient cycle time associated with the whole billing and delivery of service, dynamic. I think that's where there's a lot of interesting opportunity. We like niches and then opportunities to kind of expand, beyond there. So that's an area that I've been thinking about. I think from a Rev 1 perspective, that's probably where we're most likely to start to take a little more risk in some really newer areas, will be where we can really figure out that customer value proposition and really be confident that this is solving an important problem that is kind of creating a lousy experience today, and see where we can build from there.
Thanks, Ryan. Alex?
I think a really interesting recent innovation has just been, has surprised me, just the buy now, pay later space. That really came out of nowhere for me, and is massive. And so part of the reason why it came out of nowhere for me is like, it really didn't seem like that significant of an innovation to me. Like these types of programs existed forever. It's really innovating on the interchange fees. And sort of redistributing those in a way that can create some value for consumers. So that to me, that was just like a really surprising opportunity that is now just exploded. Most recently with Apple getting into it. So it'll be interesting to see what happens now that we're just entering a different economic cycle. I'm very fascinated to see how those companies fare through that, how that sort of credit fares, but. Super interesting and massive opportunity.
Yeah, and that's a fascinating, and we could take this conversation for hours more on all sorts of topics, but that one with Apple getting into it, I also find that fascinating because Apple has a lot of incumbent advantages, and so does Amazon. So some of these companies, which are very well fundraised themselves, but there's certainly no Apple and Amazon quite yet. What happens in this next year or two is going to be really interesting to watch. Naveed, how about you?
Why BNPL? Why are you doing this? I have a lot of reservations about this. I think that the data is showing that it's not being used to the best outcomes for both parties involved. But it's a new innovation, so let's see what happens. In terms of what I see as a really interesting innovation recently, there's a company, a very particular company that I think does things very similar to what we're doing at Dolr. It's called Composer, and this is a combination between guided and self-guided, right, or personalized investment opportunities, right? So they give you the ability to invest like a hedge fund would, with existing sort of strategies, and they allow you to test and do these things that most people didn't have access to or even know how to do. So I think that's fascinating, and I think this is a general trend we're going to be seeing going forward, is how do I empower an individual to take the things they know and put them together in ways that make sense for them to build their wealth, to build their lives, to plan, to save, to do all of these things.
Great, thanks, Naveed. We'll do two more since we have a bit of time. This is going to be a bit of a curveball, so I didn't prep our panelists for this one. But with, and we can't finish a FinTech conversation without one more question on Bitcoin. So I just looked it up. Bitcoin is just under $21,000. I think it's 20,800 and change. So two-part question and kind of just quick. But first one is, what is the low? So the low in the next 6 months or a year. And then what is the high in the next, let's just say 5 years? So, is this the low, or is it going to go a bit lower? And then what do you think the high in the next kind of 5 years is? And Naveed, we've ended with you, so we'll loop around and give Ryan a break on this one, but you're up.
Not going to make it.
Not going to make it?
No, I've been waiting my whole life to use that acronym NGMI, right? So here we go. I don't know enough. I don't know enough. I think it's probably going to go lower, just given everything that's happening, and given that a lot of the price movement is driven by sentiment. And all of the jokes that crypto bros make about value investors, I get them, whatever. But that's my opinion.
But I'll say we're not investment advisors. It's not investment advice. It's really fun. So you can make wild predictions. But is that your final answer, Naveed?
Yeah, that's it.
Okay. All right, Alex.
So yeah, also do not consider myself an expert here, but I don't think we've hit the low. So I do think it is going to keep going down. I don't know what we'll go to, alpha 15,000. And then I think in the future, I think it really just depends on if it really grabs a hold and becomes the thing for some specific use case of payment, and just sort of gets out of being on the fringes. So if that could happen, and my hope is that it does, because I think it's super interesting and a powerful technology, I think we could really see that value explode. So it's sort of like a, it could go down to nothing if it just dies, or it could be something, I don't know. Let's just, for the sake of your question, I'll say 50,000.
Perfect. Thanks, Alex. Ryan.
Yeah, I took too many finance classes to think I can, time the market or call market tops or bottoms. But I would say this, I don't see, it's hard for me to see a future scenario where over the next several years, it doesn't maintain a fairly high degree of volatility. I would say that, I do think there are use cases, applications, and, I think, cryptocurrency is definitely a real thing, and will have, good use cases kind of continue to emerge, and it being important. But like Naveed, I also have a favorite acronym that's come out of the crypto world, and that's HODL. Hold on for dear life. I think that's just a amazing acronym that can be applied in almost any scenario that we've talked about today.
That's a good one. And thanks for humoring me with our best CNBC pundit hats on for that question. We'll do one final one, and we will start with Ryan, Alex, Naveed, so kind of go back around. We're doing snake draft style here. But I guess it's two-part. One is we always ask our panelists this when we finish a conversation. What's just a prediction for FinTech? It can be something you're seeing. It can be about Ohio. It can be about the technology. It can be anything. So just kind of a quick, fun prediction, or maybe just again something you're keeping an eye on. And then the second one is favorite place in Ohio. So somewhere you're going on a weekend with family, or you have business colleagues in town and you're taking them for kind of a night out. So two-part question, we'll go Ryan, then Alex, and Naveed.
All right. Well, I guess, hard to have a real specific prediction for FinTech, but I think it'll continue to just be very much a growth industry for Ohio and attract, continued and greater levels of venture investment. Ohio, I think we just have too many of the pieces in place, for FinTech not to, just continue to grow as a really important sector in Central Ohio and Ohio kind of startup, community. And then I think from favorite place to Ohio, hard to go at night, but just think we have great state parks and would encourage folks to, get out and enjoy those. That was something we did during the pandemic, was just explored a number of state parks that were kind of ones that we hadn't heard of, and really enjoyed getting to see some of the really nice natural areas of the state.
Absolutely. Great one, Ryan. Thank you. Alex?
So I guess you go back to the HODL acronym. My prediction is that in the startup world, we're going to see some pretty choppy times. We've seen major compression in the public markets. It hasn't really made it its way to the private markets. I think the ability to get cash is going to be very challenging for startups who are unprofitable and been trying to grow. So I guess my prediction there is just I'm hugely supportive of the startup community and want to see that thrive, not only here in Ohio, but also just everywhere. But my worry is that we're entering a period where that's going to be pretty tough. And then my favorite place in Ohio, let me think. I guess, what I'm going to go say, I went to the Crew Stadium and saw a Crew game for the first time. And that was amazing. The stadium was amazing. The game was great. Like that. If you haven't been to that stadium, it's absolutely fantastic.
Yeah, Lower.com, another Ohio FinTech based in New Albany. So, which that is a awesome stadium. So I will echo that one. And also on my list, since we're keeping it to Ohio, is, and I forget the name of it, but Cincinnati's new soccer stadium. I've heard it is incredible too. So that's kind of on the hopefully the summer to-do list. Naveed, wrap us up.
I think payments and identity are going to see some huge changes. Like BNPL already, we're seeing people paying with crypto. There's cards that are used for that. So lots of innovation happening, and I think that trend is going to continue. I'm going to be with Ryan on this. Like, my favorite place in Ohio is all of the greenery, like all of the nature, all of the stuff that's so accessible. You don't have to go very far to experience.
Awesome. Well, perfect ending. Naveed, Alex, Ryan, and Natalie, thank you so much for joining us. Thanks everyone for tuning in. Great questions. Sorry we couldn't get to all of them. Tried to work in as many as we could, but really appreciate everyone taking time in the day, going through this heat wave. So hopefully this was some fun for an hour. But again, thanks to the panelists. Thanks for Rev1 Ventures for supporting this to make this conversation possible. It's an exciting time for tech in Ohio. It's an exciting time for FinTech in Ohio. And we got to hear a bit of it today on some of the, because we like to say the people, companies, and ideas doing some really awesome work. And so want to thank everyone. We'll have this recorded and uploaded on our YouTube, where we post all sorts of our content and shows and conversations. So be sure to check it out there. But again, to our panelists, thank you so much. Thanks for being here. Thanks for all you're doing. I hope everyone has a good day and stays cool. Have a good one, everyone. Bye-bye.
Thanks, everyone.